Welcome, welcome, welcome. How you doing? Welcome to another day at Moonshot Financial Academy. We're going to be talking about several points. I'm going to make it quick. We're going to talk about inflation, interest rates, and the flush, the sell the news, and hitting your price target. Today I hit my price target. I refused to leave. I wanted to see the Fed chair. I should have left. I should have sold and called it a day. But I wanted to see the Fed chair. So, and it's not wrong. I needed to see the Fed chair, but I could have done that anywhere. But instead I did it in front of my computer. And then there I feel like trading, okay? All right. With that being said, first thing is they come up before the Fed talks with a rate, right? They kept the rate the same. But they said they were going to increase it twice this year. They also said inflation keeps rising. Then came the flush. I was already out. I knew the flush was coming. But I had built some small gold and silver positions, hoping for a decrease or a good reaction. The reaction was terrible. Gold and silver crashed. The Russell crashed. Tech crashed. SP 500 crashed. NASDAQ crashed. Pharmaceuticals crashed. Not that hard, but they crashed. Everything that had to do with rockets, SpaceX, gone, flushed. Okay? Then came the dip. I started buying again aggressively. But my mistake was not to wait longer. Usually when these things happen, wait till the market closes. Because people aren't finished flushing. Some people are actually buying in more, especially institutions. They're buying, so the price starts dropping. They start dumping money, getting the price to rise. People see the consolidation and the rise. They dump money. They pull the money. Okay, the whales rule. Okay, you gotta go with the flow and try to do your best. And my mistake was I didn't leave. When your percentage, set a percentage target. I don't know, $100, $50, $500, $1,000. And when you hit it, leave. Okay? Very important. I am very disciplined. But even I make mistakes. Okay? With that being said, there was a flush. Right? So what happens when you buy the dip and it flushes again? Okay? The first thing you're going to do is you're going to see, what do I have in my portfolio that is more speculative? Means that it's not really a revenue guy. It's creating revenue, but it's more forward-looking. It's more futuristic, like IonQ. You know, it's a quantum computing company. They're great with quantum computing. They're about to they're getting government contracts, but their quantum computings aren't fully built. Marvell, awesome play. But core companies like AMD, Amazon, NVIDIA, Palantir, Eli Lilly, those are the standard. Micron, SNDK, those are the ones that are going to recover the quickest. So you're going to take your capital from the ones like Rigetti, QBTS, IonQ, QuantumScape, you know, take it out of SpaceX, for God's sakes, and put it into Micron, SNDK, Western Digital, Google, Amazon. Forget about Microsoft, it's dead. All right, listen. And why do you do this? Because see, the next day or in the middle of the night, it starts recovering, or the next day you're seeing it, all of a sudden, poof, it bounces. Stocks like Marvell, SNDK, Micron, they bounce $15 in the beginning, $20. So if you're going to get 3 shares, you're already $60 out. Plus your market order is going to come in and you're going to get the slippage upwards. So you're trying to catch it. I'd rather go down $30 than catch something going up. First of all, when it goes up, right? If I want to make my position larger by dollar cost averaging while it's going up, if you buy it right there when it's going up and you get the slippage upwards, then when you dollar cost average in, you're even closer. Now it gets rejected, and now you're even a deeper red. So it's better get it before. Man, I've gotten positions where they go down 10, 20%. I'm dollar cost averaging it, but when they go up, I'm collecting profits for 3 days. Right? And then when they're astronomically up, I'll throw in a couple shares and it'll raise the target price a little bit. But by then, there's a new support level. Especially if it's broken an all-time high. Now the support level is where it broke out from. Or where the value weighted average price is at, the VWAP. With that being said, watch the news. How are you going to watch the news? Have Yahoo Finance. For one thing, have Seeking Alpha connected to your phone. Seeking Alpha. It's a great website, connects directly to your phone, and sends you all these messages. I get them before the news says it. The president's talking and I hear something. I don't hear it. I get a text. By the time you hear it, right? So the news just came out that Trump is talking about the Iran. So yes, I'm like you see, you got it right there. I got alerted. Right there, if it would have said something about the war, I would have known. I would have gone and reacted to it. This is the life of trading. If you're gonna be trading, it's just not a here and there. You're gonna make the bucks. You gotta be on top of things. You can't let just things swing by. You know, there's bad news. You're up. Most brokerage don't have stop losses after 4. If it's 5 o'clock, you get a text that the Strait of Hormuz is closed. You might be up on something 25%. For God's sakes, get rid of it. What are you going to wait for it to drop to 25% and then another 25%? That's a 50% move. Unnecessary. Keep on top of the news. We got interest rates coming. They're gonna get up. And next time, be ready. Because I know some of your portfolios were probably green or a little green, or maybe even red, and now they're deep red. Because you weren't ready for it. And I understand, it's okay. This type of stuff used to happen to me all the time. Now I'm more prepared. And every time it happens, you'll be more prepared. Perfect example. When something bad used to happen, what I call a black swan event, which would be like when they first closed the strait. I used to not buy stuff. I used to be scared seeing everything going red and going, oh, I can't buy this, it's gonna keep going. I'm gonna try to catch the bottom. Nobody knows where the bottom is. What you can do is look at the best companies, right? The best companies. And as soon as they're down over 10%, start buying there. Start buying there. SpaceX down 5%. Start buying there. From when the recovery comes, you're already there. The recovery comes, poof. Oh, the NASDAQ is pumping. By the time you put your stock on, by the time it's already up 5%. I'd rather get it 10% under than 5% over. Eventually, my 10% under is going to go green. And it's going to keep going green. And then if I want to dump a little bit more money in it, my price target will rise a little bit. Right? If you're buying it already when it's going up, sometimes price will get rejected a couple times and now you're in the red again and it's a whipsaw. Get it before the launch. For God's sakes, keep buying as it dips. If it dips 10% today, don't go heavy. Buy 2 shares. If you cover, it's fine, you win. But if it keeps going, buy another share. If it's expensive. It drops a little bit more, buy 2 more shares. Drops a little bit more, buy 3 more shares. Drops a little bit more, buy 2 more shares. When the recovery comes, You're going to be happy. The other day, on Sunday, before 8 p.m., I had heavily bought. Dips, everything. Knowing, well, I didn't know for sure, but I said, well, and I didn't go, remember, risk management. I didn't go too heavy. Why? Because I said, well, if the news doesn't come out positive, I'm going to have to take another red day, maybe a couple red days, and be able to dollar cost. But it's just heavy enough that I would see a nice present if the contract was signed. It wasn't signed, but there was good news. The market opens in less than 30 seconds. I had over 7% return on all my capital. Right? On all my capital. That means that if you would have had $10,000, right, you would have seen how much? $700 in 30 seconds. Not only that, but it kept giving for the next 24 hours. Until today, actually. Yeah, until today, I was cashing in those profits. That is what you do to get ready, right, for the comeback. You don't jump in when it's coming back. You're already there. And remember, watch the news. Be patient after flushes. Remember, there's interest hikes coming. And remember inflation. Have a great day and God bless.